Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, February 6th, 2023. It's now the 4th. We start off in the S&P 500 daily chart in DeMark, looking back to the end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the sequential and combo cell setup 10 recycle count, and to negate the recycle count for end of day Monday, there must be a close below 4076.60 for the price flip to the buy setup 1 count. And it looks like the only possible qualified level for happening on end of day Monday would be this sequential and combo by TDST with a close above this close on the 3rd, and that will become qualified if it closes at the end of day Monday above that. And the best way for that to happen by qualifying this TDST line is from above it, so that has the best chance of that happening as if it was below the line and tried to have to get up above it for a close. And the S&P 500 daily chart has printed a doji bar right here for the 3rd. You can see the open and the close were pennies apart. And that's an indication of indecision for which way traders and investors think the S&P 500 would go. Should it go up? Should it go down? And one way would tell you, because price has not printed the combo cell countdown 13 less strict version, that it needs to get that printed before it heads down. However, the other indicators will argue with that, as the sequential and combo cell setup 9 end count was printed, the megaphone cell 7 end count was printed, the D wave up wave 5 has printed and started moving above where the 3 was printed, and the ATM studies exhaustion alert was printed here on the 1st, and historically is good indication of a downdraft to come. And there is plenty of support to the downside, and definitely a willingness for traders and investors with a lot of money on the sidelines to pour it into the markets. So right underneath is the buy TDST for support. The conversion line is not too far down from there at 4072.57, along with the trend factor down 1. Good support there. Break it, and that's down to the relative retracement up 1, which should be pretty good support, as the baseline is right there too, 3988.11, and pretty close by is the trend factor down to 3962.17, and this level down here by the relative retracement up 1 and baseline, that's quite a distance down from where we're at. And I've turned lines back on and switched off most everything else. So if it breaks below that conversion line, there is that steep angled ongoing demand line, and if that becomes qualified and possibly confirmed, as there's a little bit of room to move down here, it could be down to the baseline, and breaking that, there's the other ongoing demand line here, and then another one under there. And there considered support now, but when they're broken to the downside and qualified and possibly confirmed, that's not support anymore. And traders and investors try to keep bumping the market up and close above this ongoing supply line for end of day Monday, and that will become qualified with a close above that end of day Monday. The NYA top color chart, starting with the NYA to SPX relative performance ratio, basically value versus growth, shows as suspected that growth has broken through this ascending triangle here that it had broken out of before, meaning value, and hooked around, and growth broke through right there at that junction where I suspected it might, and is making a run down to this long-term support and resistance area, this red line solid right here. And the New York AD line has clearly broken out to the upside from this descending broadening wedge. Maybe this will be the throwback for the NDXT bottoming diamond pattern here. Could throw back, we'll go look at that later, but that would be an indication. Comes down here and then bounces off of the top line here in blue and then heads back up, and growth continues its journey downwards here towards this support and resistance line in solid red. And the ratio adjusted New York McClellan breath oscillator has formed a nice up and down pattern here called a complex pattern, similar to back here. Went on for quite a long time until it fell out. And it looks like NYA price has fallen back under this green horizontal support and resistance line long term, going to back here, and I believe that line is at 16,025, and NYA price ended the day 15,999 over here in the thumbnail. Then I extended this pink line here that I was using for this head and shoulders topping pattern back here, support and resistance. It was pretty good support and resistance here, of course, until it fell out. However, I extended that, and it looks like it was knocking at that door, so that could still be pretty good resistance here, this pink line. And the ratio adjusted McClellan volume oscillator is forming a complex pattern here above zero. Not as good as breath. It's a lot lower than that, and has been testing the zero line just about a couple of times. So that's not as good as breath, but look at the ratio adjusted summation index of the ratio adjusted McClellan breath oscillator is at 1104 up here. That's a thing of beauty. So now there's plenty of room to the downside for a downdraft as long as it doesn't go under 500. I suspect it might come close when it eventually starts rolling over, but if it starts looking like this over here, that would be a very good sign. Gets near 500 and heads back up. This was quite the scare back then, where it actually went under 500, but then faked everybody out and went back up. The ratio adjusted summation index of the ratio adjusted McClellan volume oscillator up here is looking just as good, almost to 1,000, same thing. Let's see what happens when it rolls over, how low it goes towards 500. And our SI14 has nailed the 65 green line here and rolled over. Did it go under its 21 EMA signal line? It did a little bit. RSI 59.31 EMA 59.89, so it's slightly below that, and next stop is 50 if it can't turn around. And the on balance volume is looking pretty good there above its signal line, and it has broken out of this long-term support and resistance dashed red line here, and this one back in 2022, but it broke out of this one here right around the beginning of the year. And the New York stocks only AD line, it did nail that dashed red arrow here. That is an extension of the bearish divergence from this period here. You can see it was headed up, and this was headed down quite a steep angle here. So I just extended it to see if we can get this rectified down here. This is the McClellan breath oscillator of the New York AD line, but that hasn't happened, so we're living in a bearish divergence. Another reason for the indecision doji that we noticed in the S&P 500 to rectify to the downside for a little while at least. And the intermediate term volume oscillator for the NYA didn't quite get back up to new all-time high here. However, the breath oscillator did. The intermediate term breath oscillator for the NYA went above this peak here, so that looks pretty darn good. Has an indication of rolling over like the volume one up here, but let's give it the benefit of the doubt. Same thing with the instruments above their 200 period simple moving average in the NYA. Look at that, it blasted above the 70 line, and same thing is up here. Like I said, it's rolling over a little bit, but yeah, that's a heck of a run there and deserves a rollover for a little while. And we haven't looked at the ratio adjusted summation indexes for the NASDAQ Composite and NASDAQ 100. So you can see here the NASDAQ Composite ratio adjusted summation index of its ratio adjusted McClellan breath oscillator right below it is at 582.5, and the NASDAQ 100 ratio adjusted summation index of its ratio adjusted breath oscillator here is not quite to 500 yet. So these are the big fat cap megatechs, and they're not to 500 and could roll over again like here. Made a better show of like it did before. Over here it only went up to 250. Again, made a better show here, almost to 500. And one thing I noticed that's very interesting as I browse through my charts is the ratio adjusted McClellan breath oscillator for the NASDAQ 100 right here. If you take a look at it, and over here for the NYA breath oscillator for the stocks only AD line looks just about the same or very similar. We'll switch back and forth a couple times here. Yeah, so this didn't make it quite up to this peak here like it did in the NASDAQ 100, but really quite similar. And that tells me that it really is technology, the big fat cap mega techs that are leading the way for now. And the NASDAQ Composite overbought oversold indicator will focus in on the EMA 30 in green. Just nailed this green line here, the very last one to the upside, and it nailed it back here at the beginning of 21. So a couple of years later it nailed it again exactly, and these 2 points are the highest points ever for this overbought oversold indicator. I went back 20 years and looked, and nothing has been higher than these 2 points here. And you can see in the thumbnail it rolled over and is headed down a little. I have created a new high-low chart for the NDX Big Fat Cap Megatex, and we'll compare it to the other ones, the NASDAQ Composite and the NYSE high-low charts. So you can see that on January 11th, it had a successful crossover where the EMA 5 went above the EMA 10, so the blue above the red, and that happened down here in the ROC 12 at negative 0.01, so basically right on zero. And that's when the tear to the upside started for the Big Fat Cap Megatex, and then there looked like there would be a throwback here, and that didn't pan out because it was well above the ROC 12 zero line, and then it continued on to the upside, brings us to the current day. And I don't have the date here on the NASDAQ Composite high-low chart here for the ROC 12, but you can see it was a fail right around that same time as the Big Fat Cap Megatex NDX NASDAQ 100, and the New York high-low chart for that same period succeeded. So we had a crossover of the blue 5 over the red 10, and that happened at negative 0.52, so a half right under zero, so that's a success there. So in hindsight, if I had this set up like this, I would have used this as a confirmation for the NDX NASDAQ 100 high-low, so the New York high-low and the NDX high-low right here, so that would have been the signal to get on board with the Big Fat Cap Megatex. So I scrolled up a little, and I do have the KSTs set here on the NDX high-low like I do the other charts. So the KST for the short term has bounced right off of zero, probably right around that period here where it failed, potential fail here, and then headed back up. So that was nice, another indication not to sell, bounced off of zero and head up. And the intermediate term KST broke above zero right around that time, another good indication not to jettison anything. And the long-term KST was indicating to go above zero right around then. Well, maybe not. It still looked like it was headed down, but subsequently hooked around and went up, so that's a good indication for now. And look at these blue, red, and gold here, 5, 10, 21 EMAs just pointed straight up. And so for now, even though tech had a bit of a setback on Friday, we'll look at that in the NDXT chart next. It's still a good place to be, and hang in there with what you have if you were lucky enough to buy low like we have been. And again, it's really just a matter of waiting to see what the ratio adjusted summation indexes do. We know we just saw the NDX isn't looking all that great. It hasn't been to 500 yet, so that's another indication to take it serious when we get this NDX blue line EMA 5 to get back under the red. See what happens and where the summation index is at. The NDXT daily chart with the diamond bottoming pattern in red and the blue line showing it going parabolic. And now we're going to concentrate on this candle right here in red for the third. Okay, I made some changes to the chart. I've gotten rid of the parabola line going up to here, and I've tried to blot out this candle that hit the relative retracement 0.382. There's still a little piece of it showing, so just ignore that. So by looking at it now and taking that candle away, that was irrational exuberance on the part of investors pouring money into the big fat cap megatechs. We can see that the next day, meaning Friday the 3rd, printed a shooting star candle, and that would be extremely bearish to the downside if this candle was not blotted out. So I'll unblot it now. So now the candle is back in the picture here, and we'll have to give the NDXT the benefit of the doubt, but I still say that this inverted hammer, or whatever you want to call it, shooting star, you can't call it the shooting star with this candle here, but that's still a bearish indication, so there could be more downside, and the target back to the downside would be the breakout point here. However, traders and investors decide to keep the momentum going to the upside. There was an up close, then a down close on the red candle here. So if there's an up close above this relative retracement 0.382 in DeMark and close above that for end of day Monday, this level will become qualified. And then if it does that, it should be a pretty easy confirmation bar depending on how far up it goes past the retracement line for Monday, if it does. The S&P 500 support and resistance levels big board chart shows there is no gray area. So to the downside is S1, and then the disqualified by TDST, and break out of the 4100 zone. The closest level in the 4000 zone is S2. To the upside is the pivot point and the weekly 2018 broadening top in dashed red. And price in the aftermarket hours close on Friday for the S&P 500 was 41.34, and the NDXT lagging line close is still a lot closer to the NDXT up target line than it is to the diamond top there, that bottoming diamond patterns top. And you can read about the NDXT here. I've changed the acronym for it to Meta, Microsoft, Apple, AMD, Alphabet, and Alphabet. So that's probably B and C, Alphabet. And then Tesla as the wild card, and Tesla is not in the NDXT, so it's now the MAT. And the ROC 1 has been bouncing around up and down to its positive volatility line and the negative volatility line. It's at negative 1.04, just slightly under the negative volatility line. ATR2 69.52, it's out of the green zone to the upside a little bit, and the PPO extreme pulled back in a little bit. So to the downside for that is the PPO level 5, 2.99%, and to the upside is the PPO level 4, 4.50%. Get past 4.50% and there's quite a jump up to the PPO level 3 at 8.43%. And the New York traditional McClellan breath oscillator to get back to zero would require 1,121 decliners over advancers to get back to zero. And it took a significant leg down from where it was the day before at 31.25. Have a great day.